Traders expect an upward repricing across the bond market, with emphasis on short-dated maturities given the sustained hawkish stance by the Central Bank of Nigeria's monetary policy. Meanwhile, investors shift attention to today's 227.54 billion naira T-bills auction. Kolawole Komolafe, Treasury Team Member at Access Bank, joins me now for more market movements. Kolawole, thanks a lot for joining us on the show today. This week has been packed with a whole lot of developments. First, we've had this week's bond auction. We'll talk about the outcome of that. And reactions continue to pour in from yesterday's bigger than expected MPC rate hike. For you now, has the market responded so far? And provide us more details on this upward repricing we expect.
All right, thank you, David. Thank you for having me. So you're right, this week it's been really eventful. From Monday till today, we have major market events that are happening. On Monday was the bond auction, where we had 150 billion naira on offer for the 2029, 2031, and 2033 bonds. We saw that the subscription level was quite high, about 415 billion. However, about 265 billion was sold on those papers. So on Tuesday, which was yesterday, what the market had been waiting for, that's the outcome of the MPC, and the general expectation before the outcome before the results were announced, was that at least maybe rates will be kept constant. But it was a surprise that the MPR was increased by 50 basis points from 26.75 to 27.25. and would see that transfer mechanism both to the money market and also to the fixed income market. We would see it, or we expect a bearish market where yields would increase across those papers, particularly on the short dated papers. For the bond auction that was conducted on Monday, today is the settlement date. So I would also touch on the system, on the level of system liquidity. Opening the week, when the credits, mostly because of the back inflows and the coupon payments. The coupon payments have been pouring in from towards the end of last week and also on Monday. So you see that system liquidity is quite high, but the bond auction settlement and the FX intervention, because the CBN came in on Monday to intervene to banks. So the settlement is today. So by the end of today, we expect that system liquidity would have been depressed a bit. I'll also touch on the NTB auction, which you had earlier mentioned. 227 billion naira is on offer across the standard maturities. That is the 91-day, the 182-day, and the 364-day papers. So we later today will hope to see, or would expect to see, the result of that auction. Would see if the actions yesterday of the rate hike would be reflected in the auction. We might also begin to see some OMO auction being conducted from this week, because first off, there's a lot of system liquidity, and also the CBN would want to activate that transfer mechanism into the fixed income space, and it will be chiefly from the OMO auctions, which we might start to see from today, from tomorrow, and also going into the week.
Yes, and we're also weighing how this would also affect the overall investment appetite we'll see going forward now as well, now with this high interest rate environment. For you now, what's your forecast as well? Looking at on the back of some of the other adjustments we've seen so far, the adjustments to the CRR for deposit money banks and merchant banks as well, lending to the real sector of the economy, that's also on the minds of so many. At this point in time, we are seeing borrowing costs go higher, and even defaults likely inching up. But for you now, how does this signal rub up on international investors and also domestic investors here?
Okay, for international investors, I think that would mean a lot more interest in the Nigerian market, because for investors that typically do carry trade, this is very welcome development. Because for other developed markets, just last week, on 18th of September, the Fed cut its own rate by 50 basis points. So what you're seeing is that differential between Nigerian market and other developed market is that interest rate differential is wider. So for investors that chiefly carry trade transactions, you could see that capital inflow into Nigeria and other emerging markets, but chiefly into Nigeria because our MPR is up while the Fed has cut rates. So that will be good news for investors that are engaging in carry trade because that's opportunity for more yield, for the CRR that was increased to 50%. If you listen to what the central bank governor said yesterday, it's still, inflation is still something that is very much at the fore of the minds. And even though we have inflation at 32.15%, it's still not at that desired level. So the CBN is using all the tools in its disposal to see that inflation is brought within the target levels sooner rather than later, which is why you see that for commercial banks, the CRR was increased from 45 to 50, while for merchant banks, to 16%, just to make that tightening stance more pronounced and fighting inflation head on.
Yes, we'll have to leave the conversation here for now, but a lot more is definitely required to achieve price stability. Thanks a lot, Kolawole, for your time on the show today. That was Kolawole Komolafe, Treasury Team Member at Access Bank.